All right. Good afternoon. Good afternoon, or good evening, I should say. My name is Anissa Smith, and I'm the Chief Workforce Officer for Center for Urban Excellence. And this month we are doing it's Money Making May. So we're going to figure out how to make your money work for you, how to build your credit, how to build generational wealth, how to manage your finances. And so today we are very fortunate to have Michele Condon, owner of Faithful Consulting Enterprises, with us. Michele Faith Condon is all about family, faith, and finance. Okay. After retiring from corporate America at the age of 35, Michele immersed herself in her entrepreneurial journey. She decided to pursue her passion for empowering the masses to take control of their lives by becoming good stewards to their finances. I love it. Michele is committed to educating others about financial literacy and providing the tools and resources needed to establish generational wealth. She's trying to make us rich, y'all. Michele is a dedicated wife, mother, mentor, inspirational speaker, and entrepreneur, as well as a licensed life insurance and annuity agent. She's a native of Berkeley and currently resides in the Bay Area with her family. She live in Oakley, y'all. She in the burbs, okay? Anywho, you guys welcome Michele Faith. Thank you for joining us today. Thank you for the gems that you're about to drop and trying to help us build our wealth by having um, benefits. And so the floor is now yours, ma'am. Thank you.
Well, thank you so much for that warm introduction. Usually I'm the person giving out the good introduction. So people always say, Michele, I want to take you on the road, but I guess I'm taking you on the road, Miss Anissa. So like Anissa said, I'm Michele Faith Condon, um, owner of Faithful Consulting Enterprises. And a little backstory about me, how I got into the financial industry is I retired at 35. So I got into biotech at 19 years old. I went through an amazing nonprofit program, Biotech Partners, that allowed for disadvantaged youth to be able to get into the biotech industry as teenagers. So by the time I was 19, I was out here making money. I had a whole career in biotech, and I was in corporate America for Bayer Healthcare in Berkeley, California. So after working there for 16 years, I became a real estate agent. I owned real estate. I saved six figures in my 401k. So I figured I've done it. I've made it. I did the American dream and I did it quick. So by the time I was 35, I said, I'm retiring because let's keep it real. Nobody ever really teaches us what retirement looks like. So you find out about retirement and finances from your coworkers. When you guys, everybody knows that your coworker is like your trusted therapist, your financial advisor, and everything. So I had some good coworkers, so they had me invested in Bitcoin, cryptocurrencies, the stock market. So I said, listen, I'm good and I'm hitting the road. I'm going to Hollywood to be a stand-up comedian, and a superstar. But I tell people, shoot for the moon and you land amongst the life insurance and annuity agents. So it has been 7 years. I have been in financial services and I love every minute of it. So what I do first and foremost is I educate people on financial literacy. America is in a financial crisis, and I realize the reason why is because never in the American education system are we required to have financial literacy. So what I do is I'm a director at Women's Finance Institute, and I'm a part of Project 1000 mission. And our mission is to empower at least 1,000 families per year on financial literacy and how to leverage life insurance to create wealth. But today, I'm going to show you how to not only create wealth through life insurance, I'm going to show you how to protect your wealth through life insurance and living benefits. Okay, so let's get this party started. Like I said, I am Michele Faith Condon. You guys already know what time it is. Some of you guys might know me because I'm actually a superstar on TikTok. I'm the finance comedian because ain't nothing funny about not having no money. But I only got 3 followers and I keep telling people it's TikTok. So that's not really working out for me. But at least I got y'all today. Y'all follow me on TikTok. So we're going to start talking about the 4 functions of life insurance. So most people, when they think of life insurance, they are thinking about the death benefit. But life insurance now has a living benefit component, and it is a game changer. It is the reason why every person who can qualify for life insurance needs to get that protection. Because what living benefits does is it serves as income protection. In the case of critical illness, chronic illness, or terminal illness, you can get a large portion of your life insurance policy while you're living. So, if you have children, if you don't have children, if you are making money, you want to make sure if there's a change in your health, you have a pot of gold to pull from, so you don't have to go into your savings, so you don't have to go into your retirement, you don't have to go into your kids' college funds. So the protection factor of life insurance is very important. And of course, leaving something to the next generation, and we'll talk about that more. And when you get permanent life insurance, all permanent life insurance policies have a tax accumulation account, a tax deferred cash accumulation account attached to them. So a part of the money that you pay for your life insurance monthly premium goes to the cost of insurance, but the other part is going into a savings vehicle. And if you set it up properly, it can become a tax-free stream of income to pay you for the rest of your life. But here, emphasis on tax-free. You guys, by the time I was in my and by the time I reached 35, I saved six figures in my employer sponsored retirement plan, which was a 401k. But guess what? It's a lot of taxes attached to that. With life insurance, when you're using it as a long-term savings vehicle, when it's set up properly, you can have a tax-free stream of income to pay you for the rest of your life. And last but not least, it's about building wealth. You can leave a wealth transfer. And the reason I like to share this with people is life insurance is the best vehicle for a person with a little money to leave a lot of money to the next generation. I'm all about generational wealth. We have to make sure that we are leaving something to the next generation. The way that the economy is set up now, pensions, 401ks, retirements, all of those things, Social Security, none of those things are going to be promised. I'm actually writing a book on this because we have to make sure that we are putting the next generation in a financial position, but we also got to give them the financial literacy because they will not have the opportunities that we have seen in our lifetime when it comes to saving and having employer sponsored saving vehicles. And so, like I said, now life insurance is about the what ifs of life. In the case of critical illness, chronic illness, or terminal illness. So, critical illness is a big one, because a lot of times we all see that people are having heart attacks, strokes, and cancer. And there's no age on any of these anymore. We see this at all ages. That's why I get kids insured at 15 days old. And I'm getting clients in their 70s covered with living benefits for this reason. Every 34 seconds, someone is having a heart attack in the US. Every 40 seconds, someone is having a stroke. And I'm not claiming this for my life, okay? But they are saying 1 in 2 people will be diagnosed with cancer in their lifetime. So what does that mean? I come from biotech. I made medicine for hemophiliacs, right? So what does that mean? These biotech companies, they are making medicine for everything across the board. So even though you have these critical illnesses, you're going to survive to pay another bill. Look at those survival rates, 60%, 70%, 87%, 98%. Your body could shut down, but best believe the bill collectors, they in perfect health. The bill collectors, they call on the dime every single day when any of these critical illnesses stop you from producing income. That is why living benefits is a game changer because it's income protection. If any of these things jump off, as well as any of these other factors, right? We only talked about 3, but let's break it down. Critical illnesses, heart attack, stroke, cancer, end-stage renal failure, major organ transplant, ALS, blindness, paralysis, aneurysm, central nervous system tumors, major multi-system traumas, AIDS, severe disease of any organ, severe nervous system disease, Parkinson's, Huntington's, multiple sclerosis, something I can't even pronounce, major burns and loss of limbs. That's all covered under critical illness, and we all know someone who has suffered from one of these conditions. And chronic illness, you guys, it does not even have to be a change in your health. It could be an accident. A lot of times we get car insurance just in case something happens to the body of our car. It's the same thing with living benefits and life insurance, just in case this body breaks down. So you might be in an accident. Our CEO is a multimillionaire. His wife literally fell in their home and became a paraplegic, and she became chronically ill. So chronic illness is when you can't perform 2 out of the 6 daily functions of life for a period of 90 days or more. That's having a severe cognitive impairment, That's bathing, continence, dressing, eating, toileting, and transferring. All of those things are covered under chronic illness. And then terminal illness is when you have 24 months or less to live, diagnosed by a doctor. And I know you guys are wondering, like, oh my gosh, this girl got some, I could tell she an actress. I could tell this girl is funny. Why is she not in Hollywood? I'll tell you why. Because of these three qualifying conditions. You know, when I retired, I'll never forget, it was September 7th, 2018. September 11th, I had my first sold out comedy show at Tommy T's. And you guys, I was on my way to Hollywood in just a few months to get training from some of the top comedians in the nation. But I got a phone call that changed my life forever. And it was the hospital. Not only were they calling to say that my mother had a critical illness, multiple myeloma, incurable form of cancer, they were also saying that she had a chronic illness, which was dementia. And unfortunately, they deemed her to be terminally ill. You guys, when the hospital called me, they said, Michelle, we want to know what your financial situation is like because I was caring for my mother. My mother didn't have a retirement, she didn't have a savings. I was her retirement. So when they told me it was $3,600 a month for her to get the care she needed, and they said, well, Michelle, what is your financial situation? I said, oh, I can tell you what it is. Me and my mama getting bunk beds. And you guys, that's what I did. I moved my mama in to my home and I became a 24-hour caregiver. And that is when I became a superstar for my community. I had to put Hollywood on hold, but that's why you always want to make sure you have living benefits because one, you never know if you have a child that's going to put their life on hold for you, nor do you want your child to have to put their life on hold, you know? So living benefits, I turn my pain into purpose by becoming a community star. And I share this information with everybody so I can make sure somebody else is protected. And so we had a client, I want to share this case study with you because, you know, proof is in the pudding. And the client came to us at 40 years old. And I'm just going to tell you guys, 40 is the mark when people start thinking about retirement. That's when people like, whoo, I want to retire in the next 20 years. Let me get me my retirement together. So he came to us at the age of 40. He was a chef. So he didn't have a job that offered him a retirement plan like a 401k or a pension. He wasn't contributing to Social Security. So he had to come to a life insurance agent like myself to be able to get a policy, a life insurance policy, where he could save for retirement through the cash value. So he got a $300,000 pay policy. His payments were like maybe 200 something dollars a month. And unfortunately, within 2.5 years, he got diagnosed with colon cancer. But here he is getting the check for $220,000. Now, let me keep it real with you. This man didn't pay nowhere near $20,000 into that policy over that time period. He never even got to the point of really saving for his retirement. He was just paying the bare minimum payments. But guess what? Look at his check. This is his actual check from Fidelity Guarantee Life Insurance Company, valued at over $60 billion, this company. But guess what? Do you think that his children had to put their dreams on hold to care for him? No, because he had $220,000 to be able to get the care that he needed. So it's a game changer for your life. And so now we're going to talk about the different types of life insurance. So the first type is term. So if you ever hear a commercial and it's like $1 million in life insurance for only $10 a month, y'all don't believe the hype. That's the term. It's a short term, probably 10 years, and it's probably somebody 21 years old in the peak health of their life, okay? But term is temporary. So it will expire over a period of time. So, you know, a lot of people have a bad taste about term in their mouth because they've had family members who got 30-year terms in their 20s and they expired at 50 and now they got high blood pressure and cholesterol and the rates is the 20-year-old price is not the 50-year-old price. So we tell people term is phenomenal. I call it pump up the volume because term is typically less expensive than permanent life insurance. But guess what? It got those living benefits. So I tell people, if we got to get you a $40 holla, at least you're going to be able to have some living benefits because term typically is less expensive than the other types of insurance that we're going to talk about now. So now we're talking about permanent life insurance policies. So that old school life insurance, whole life, you know, most people just say, oh, I got whole life policy because they said it's for my whole life. But whole life is actually a type of life insurance. And it's that old school life insurance. I've never sold a whole life policy because it only averages 3 to 4%. And we've seen the rates come down to even 2 to 3% during the pandemic. But whole life is rigid. You miss some payments and your policy can lapse. So but however, don't sleep on it because the Rockefeller family, they used life insurance over 100 years ago to build wealth through that whole life insurance. But then they came out with universal life insurance. And this is where life insurance companies wanted you to have more flexible options as well as get a higher rate of return, right? To incentivize people to really use life insurance for that cash value function. So you're getting a 4 to 5% rate of return with flexible universal life. And then you're also getting you're getting that cash accumulation. But then we want to take it up a notch. So they came up with variable universal life. Now, whenever you see the word variable, that's a red flag. That means your money or your investment is directly in the stock market. So a variable universal life policy, I never connect my clients to, because if the stock market crash, and we've been seeing that bad boy go up and down, your life insurance can crash as well. So we will never connect any of our clients, but we want you to be educated on it. But last but not least, we have Index Universal Life, the IULs. And you guys hear Waka Flocka, Beyonce, Jay-Z, Kelly Rowlands, all the superstars talking about be your own banking, infinite banking. It's that good old cash value life insurance. And Index Universal Life is a very popular one, and it's all over the gram, okay? And the reason being is the index concept came out in the 90s. And what it allows people to do is you get the gains of the market when it goes up, but when the market goes down, it's like you just sit on the sidelines and your money resets to zero. So with the index universal life policy, you're guaranteed zero. So you're guaranteed not to lose. So not only you got your living benefits, you got a cash value account where you get going up, but you're not going down. So in this illustration, the orange line is like if you had an index universal life policy or an index annuity, because people with old 401ks, they can roll them over into an index annuity, or even if you're retired, you can roll over your money into an index annuity and get out of the market. The blue line is the stock market. So as you can see, the up and down and all around, that's in the stock market. That's the blue line. But people are like, well, the index concept, the IUL, that must be too good to be that sounds too good to be true. When the market goes up, your money goes up, but when the market goes down, your money doesn't go down. Yes, but in some cases, your money can be capped. So I'm going to show you how powerful it is, even with just a 6% cap. So in 1999, both the blue and the orange line are starting off at $100,000, right? Don't worry about the black line. That's just a fixed account, right? But as you can see in 2000, and these are real events that happened in the history of America. In 2000, we had the dot-com boom. The stock market, the blue line jumped up 18%. So everybody was popping their collar, right? But the index had a max of 6%. So they only went up 6% to 106,000. So some people are like, well, man, I wish I could have got that 18%. But before people could finish celebrating, we had 2001. And that is when we had the 9/11 tragedy, right? So what happened then? That's when America started to lose their faith in America. And what happened? The stock market came tumbling down 11%. Then the dot-com crash came down another 10%, and then it came down 21%. Over a 3-year period, that money dropped 42% in 401ks and in the stock market. But as you can see in the index universal life, it locked into place because you're guaranteed zero. So when the market goes down, you just hold on tight to your money in your IUL. But then the stock market does what it always does. It went back up. And as you can see, it went all the way back up to 2008. But guess what? The index concept went all the way up till 2008. But because it's not recovering from a deficit like the blue line in the stock market, it is only up. It is no down. But then what happened in 2008, 2009? I told you I'm also a real estate agent. That was when we had the real estate mortgage crisis. And you guys, I had clients losing $1,000 a day the whole year in the stock market because it dropped 35%. You know, people literally went from living the good life to homeless during that time period. It was a very devastating time. But think about the people who were planning on retiring that year and they just lost 35% of their money. So by 2011, the stock market finally recovered back to the original 100,000. But look at the index concept. It's up over 140,000, even only getting a 6% return. So you guys, there's only one way I could put this. In the famous words of the rapper Cardi B, the index concept, the index universal life is up and it's stuck and it's up and it's stuck. When a market goes up, your money goes up. When a market goes down, your money is stuck in place. When a market goes up, your money goes up. And when it goes down, it's stuck in place. You guys, up and stuck is better than up and down and all around. Who wants to be a millionaire? I do. I do. But you guys got to understand what game you playing. People want to play in the stock market, but a lot of people don't have money to lose and they don't have time to recover from those devastating losses. I got my hands into a little bit of everything, but I make sure I connect my clients to a foundation that's safe and built on the fact that there's no risk involved. What you do on the outside, that's different, but you want to have a foundation that's safe with no risk involved. So the last thing I'm going to show you guys real briefly is this. Excuse me. Life insurance can be used to build wealth. The Rockefellers did it. All the celebrities are doing it. And guess what? You and your family could do it too. Over 3 generations, you can turn a $10,000 lump sum family contribution into $312 million over 3 generations. And it's easy. Let's say you got a granddaughter named Anissa, and you the grandmama, and you say, you know what, Anissa, I'm not getting you a new car when you graduate high school. I'm putting $10,000 into a vehicle that with a rate of return of 8%, and it's gonna be a tax advantage vehicle. You ain't gonna have to pay taxes when you pull out this money. But all I need you to do, Anissa, for the next 45 years until you get to grandmama's age, I want you to save $100 a month to go with that $10,000 I started you with. After those 45 years, that money is going to compound to $892,000. So then Anissa is going to have a grandbaby named Jai. And then Anissa going to tell Jai, I'm going to give you half this money to use, 446,000. But then the other 446,000, Jai, this is going to be a gifted lump sum and you're going to keep it in this vehicle. But this time around, I want you to add $200 because we got to take inflation into account. But I need you to save it for 45 years, just like my grandmama told me, with a rate of return of 8%. Over that 45-year period, that money is going to compound to $17 million. And then we got Jai's grandbaby, Raina. And Raina about to get the bag, okay? Raina is about to get half of that $8.6 million to use. But then the other 8.6, that's going to be in the family vault, right? And Raina understands the assignment. She got to put $300 in a month for the next 45 years with the rate of return of 8%. And because it's a tax advantage vehicle, over those 3 generations, you guys have made your own wealthy family with $312 million. You guys, it's that easy. But we have to educate you on the different vehicles. And not only do you have to pass down the money, you have to pass down the mindset. So you guys, that was just a little information I wanted to share. But what's next? You guys can ask me any questions you guys have. You guys are welcome to scan this QR code and book an appointment, a one-on-one appointment with me. What I like to do is give my clients, after they hear this information, a complimentary personal finance checkup. And I give events on Zoom, I give events in person, and I travel the nation with this information. So I would love to stay in touch with you so you can come to one of my events, because we break down the money mindset and we break down taxes and risk and inflation and retirement. And we really give you the fine print of financial literacy and how to build wealth. So thank you all so much for your time. Does anybody have any questions? Well, if you don't have any question, oh, okay, Anissa, did you have a question, Anissa? Oh, wait,
Yeah.
okay.
Oh, yeah. So I think oftentimes we feel like life insurance can be pretty expensive. And so how is it determined, or if someone has like minimal income and maybe they only have 30 or 40 or $50 to be able to put aside monthly or something to be able to afford life insurance, or these I keep wanting to call them generational benefits, but there is a generational benefit. So is that something they can do? Because oftentimes people are just, they're trying to make it, as you said, things are going up, inflation, prices, groceries, gas, but they want to leave something. They want to start something. A lot of our participants we have younger youth participants, we have older adult participants, and everybody wants to start somewhere. So is that something they can do if they have, minimal investment? Can they still
Yes,
take advantage of these benefits?
yes. Let me tell you, I call them $20 hollers. Okay, listen, $20. I was setting up there some policies today, and those policies were $20. You know, the thing about it is life insurance is not cookie cutter. You know, when I work with clients, I tailor make it to their budget. If you tell me I got $23, I'm going to tell you what I could do for you. And I'm more like an insurance broker. So I work with a multitude of different companies to be able to have those different options and solutions for you to make sure that you can get covered and get living benefits, no matter how big or no matter how small, but affordable and tailored to your budget. And then sometimes you can get an index universal life policy where the minimum might be $20, but the max might be $400. So as your money goes up, you can say, well, okay, let's start me off with 20. And then every year we meet, we come back to the table. Then you'd be like, okay, well, listen, let's do 30 now. Then you might call me and say, Michelle, I just got a bonus. Can I put an extra $200 in? And I'm gonna say yes. So we make this an experience that's tailored to your life, your lifestyle, and your financial goals. Because everything in life is a financial goal. So that's gonna be the first question I ask. What are your goals? What are your dreams? And then we're going to align them to your finances. And we're gonna take it every step of the way to make sure that you understand the importance of building wealth, protecting wealth, and preserving wealth.
Mhm.
So
Thank you,
thank
Michelle.
you. You're
So one of
welcome.
the things I did here, I know we only have a couple minutes left, we're going to end on time. One of the things I did here is, I think we've all watched like Housewives of Atlanta or something like that. I listened to Candy Burris say that she used her living benefits to be able to purchase homes um, and things like that. And so when I think about life insurance, at first I just thought I have to be able to afford to die. Right? Like I just need to be able to die without being one of those what is it people are using now? They ask you for money through
GoFundMe. GoFundMe.
GoFundMe's, right? I'm like, I don't want my family to have to use a GoFundMe, right? So you get any sort of policy just so, but then I have Gabby now, and I'm like, okay, well, now I have to cover her too, and I need to be able to leave a little something behind, and so when you think about those things, you want to buy a house, you want to do all these different things. I think this is a really good way to be able
Yes.
to create your generational wealth, as she did the breakdown. Not only that, there's also a career path in this. And that's something that you can talk more with Michelle about, is if you want to become an agent, you want to
Yes. Yes.
insure
Yes.
everybody in your family, you could kind of be the person for your family to get everybody in your family plugged in. Imagine if you start a policy at 18, what that's going to look like when you're 45, or what that's going to look like when you're 50, or if you
Yes.
get grandma, your brother, your cousin Day Day and them insured. Not everybody's kind of starting to build their own generational wealth for their families. And so, Michelle, thank you so much for
And
coming
yes,
on. You
we
guys.
are looking for more agents like you guys. This information, we are expanding across the nation, and we are looking for young people. We are looking for seasoned people. I have agents that work with me who are as young as 20 years old, and I have agents that are 69, turning 70 this week that work with me. And the importance is that we need to make sure that the next generation has this information, and we all need multiple streams of income, and anybody can do this business. You don't have to be a people person. You don't have to be a stand-up comedian. You just need to have a heart to help people. And I train people all day on how to create their own business in life insurance. I always tell people, if you want another stream of income to make money, go to the money business. So I am here for you all.
Awesome. Thank you, Michelle. Thank you guys for tuning in for our Money Making May series. And so next week we will have local Spark Point. They do have an office in Vallejo. They're going to be talking about how you can improve your credit, how you can work with them. Their service is free of charge to build your credit, improve your credit so that you can take advantage of all that life has to offer. We know that credit score and all those things matter. And so and we'll also have mechanics, banks, and farmer on the call to also talk about all of the banking benefits and how it's important to, keep your money out the shoebox and put it in the bank. And so tune in next week. I appreciate you guys. If you don't have any additional questions or you need anything from myself or Raina, log off. Have a good night.
Thank y'all.
Bye.
You're welcome. You're welcome.